I know people like to get more excited and think it's going to continue, but I think it's as fair that the next 100 to 200 could be down as much as up. It's certainly not the end of this run, but it's very overextended. I also think more attention is going to be paid to silver now because it had underperformed compared to gold, but I think they're still in secular bull markets that still have a long way to go. But it's too much extended now, gold, not that it couldn't be beneficial, it will be, to actually have a consolidation and a correction. I moved out of uranium, not because I didn't think it was over, but I felt that gold and the non-uranium metals were going to do better, and they basically have. Let's just put it this way. We're more than halfway through whatever this bull market ends up being, but it's still as good of the second half as the first half was. But it's certainly not anywhere throw a dart, can't miss attitude I felt gold was at 12 or 1300, staring at 2400. Now, I know people are going to say, and I know there's very bullish people out there that are going to say, well, it's in uncharted territory. There is no resistance at all. Yes, there is some resistance, and it's the idea of normal profit taking after something has moved a lot. And I think it's just a little too much froth at the moment in gold to think we're going straight to 3,000 from here. Most people would guess this wrong, but since January 1st, 2000, gold has outperformed both the stock and bond market. And most people, even in the professional community, would get that answer wrong, thinking that the stock somehow did better than gold. It has always been, and you know I've called this in the past, the Rodney Dangerfield investment. It's never gotten the respect, nor do I ever expect mainstream Wall Street to ever get behind it, because they've always treated it like kryptonite. But it's gotten to the point now where people are recognizing that this accumulation is for something so big, maybe bigger than anything we've ever seen in our lifetime, because to have driven it to this level, given how narrow the interest is in it, it certainly has been accumulated for something more than a trade or a speculation. And obviously it's going to be something that we've talked about in the past, and that there's a big change coming afoot in the world monetarily and otherwise. And I told you back in the early days that the BRIC nations were going to be behind it, and it makes sense for them to accumulate gold, because when they do finally want to compete openly with the United States, having something that gold backs is going to give them a much better palatable acceptance of whatever new they come out with than it just being another type of fiat currency. This is probably the biggest thing I think Wall Street, when I say general Wall Street, is going to miss, and that is what the BRIC nations and the formation of them and what it's going to lead to. I have said since 3 years ago when I first got behind it, is that when they're all said and done, what they will do to world trade will be comparable to what the Industrial Revolution did to world trade. And because how big I believe they're going to get, they will eventually come up with something alternative to the dollar, even if it's just among themselves and not a new world reserve currency or whatever. And to have gold in some form backing whatever that is will be much more palatable when they have to compete directly with the dollar than just being another type of fiat currency. And that's one of the main reasons why I believe especially China has been accumulating it and will continue to accumulate it. After 40 years and losing enough money to last 9 lifetimes, things normally take a lot longer and become a lot harder than we expect. But I will tell you this, the BRIC situation is gaining momentum. It's not losing momentum. The United States is losing momentum on the world stage, both economically, politically, and otherwise. And I really think once you see a couple more key countries fully join the BRIC, then I believe it'll steamroll. So I have said that in the next 3 to 5 years, coinciding with also a very negative view I have in the US about building a financial ark, I think BRICS will coincide with the United States in serious economic, social, and political trouble, and the BRICS becoming a formidable competition on the world trade stage. This is a dramatic difference. To move at the level that it has and the offtake of physical is not the normal investing reasons why average people are running into gold. This is primarily a very small select group, central bankers and very, very sophisticated people, and they're doing it because they recognize several things, including that people are moving away from U.S. assets in general. U.S. citizens may not yet. That's why they've been able to pick up the slack and buying treasury bonds at rates have not gone as high as they should be going. But the bottom line is the reason gold has moved up, it's not the normal stuff or real interest rates this or inflation. It's because there's a dramatic unfolding, yet not to be recognized yet by a lot of people, but some of us believe this big change coming on the world stage economically and monetarily. I was backing up the truck when it was 12 and 1600. So actually, most recently in the last few days, I've certainly told the clientele that we have in our planning group that I'm more than willing to take 5 to 25% off the table now, because I bought it mostly for capital appreciation. I didn't buy it because I felt that someday I am going to need a piece of gold in order to live. Now, I believe that argument is a decently strong argument. I don't think the conspiracies and all the what some people would call the crazies, I don't think they're all that crazy. I think things could get very, very ugly. I, for one, believe it's going to happen in the U.S. But I will never, because of my personal beliefs and faith beliefs, ever feel that I have to live that way. But I don't think gold's as attractive at 2,400 as it was 1,200, especially when I think the limit to its upside is going to be nothing more, and still will be phenomenal, nothing more than 50% more from where it is now. So a good part of the move is over. Do you still want to own it? If you believe in those fearful things, yes, you should have it as an alternative to paper currencies. But as a pure capital play, I don't think it's attractive. In fact, as I've said in recent days, when copper was at 4, I moved more interest and felt copper would outperform gold going forward. I even think silver can outperform gold going forward here now. Doesn't mean gold's bad. It's just not as attractive as it once was. If you want to talk about the biggest blooper in my 40-year career, was thinking 2 years ago, my God, mining shares, look how cheap they are. They've only fallen about 50 to 70% on average since then, and that's what my portfolio on them looks like. I'm at a loss. Maybe some people always have a reason to tell you why something's doing something. I'm at a loss to explain the discrepancy now, especially since how much acceleration we've seen in the metal prices. I think there's some fair excuses, so I'll throw them at you, but I don't know if they're all totally legitimate. First is the junior resource market in particular. The type of people that used to play it aren't around anymore. Most of those people have moved on to other things. In fact, you know now that your news in Canada about a lot of news is coming out about pension funds and all haven't even been investing in Canada. They've been investing away from Canada, and the mining industry has suffered from that. The second thing is that the competition. Listen, the younger the people are, the more aggressive, I'll use the word aggressive, their emails are. They're never going to touch gold in the same way I'm never going to touch Bitcoin. So there are some legitimate reasons why mining shares, financing, regulatory, politicalization, people concerned now. I personally wouldn't invest anywhere outside of North America because of the risk I think a mining company will face out there. But outside of all that, especially with gold at 2,400, copper at 440, silver, and many of the shares, including some of the biggest majors from Newmont to Barrick, are still down 50% or more. I don't have a real legitimate answer other than to say this. If you believe metals aren't going out of business, which they're not, it's not like there's a new era and we don't need bicycles anymore because cars have been invented. We're going to need metals 5, 10, 20 years from now. Sooner or later, they have to move. There's just no about it. The only difficulty is some of them had run out of gas now. They can't get capitalized. They've issued too many shares. Their stock price is too low. So there's going to be a washing out of the real cheap, overextended juniors. But sooner or later, they need to catch up. Now, what may first happen, which would be really the last shake, is we may get this correction if I'm right in gold, and those shares, what little people have faith in them, will just throw in the towel and say, that's it. They even missed the move in gold. But I do think if you're investing for more than the next few weeks or a couple of months, I'm putting more money into the mining shares as we speak. I do think they're probably, as a sector, the most undervalued sector that I can look at right now. There's nothing else. When you look at it and you add up that somebody that I spoke to earlier today brought up the fact that if you add up the total valuation of gold itself and all the companies that mine it, it doesn't equal even 1% of all investments. That's too small for what's happening in the world and what gold is going to become, as we talked earlier, as a monetary factor again. So if you're patient enough and you can look past the next few weeks, which is very tough now. Can I just say this to you? One mistake I would tell speculators, because that's what we are. We're not investing in juniors. We're speculating. We're gambling. You need to stretch out your horizon. Even the best companies can't have news every day and all. It takes a little bit longer than a week or a month. If we're more patient than a week or a month, I find it very difficult not to believe that the mining shares won't be substantially higher if we have an interview 6 or 12 months from now. My favorite commodity right now is copper. Copper has replaced gold as my number one. And believe it or not, gold and silver would be nip and tuck, and maybe even silver's a little bit ahead of it, only because it has a lot more room before I would believe would become overly expensive. It has an ever improving fundamental argument that didn't exist 10 or 20 years ago. And even though it loses out somewhat on the monetary side, it more than makes up for it on the industrial side. People have sometimes not bought silver because it's really not used or hoped to be used in any monetary way, and which is true. But at the same time, its industrial use has increased dramatically while new supply has not. That's probably the biggest frustration in all of this. It is that never has the fundamentals of supply and demand looked so positive for so many metals, better than I've ever seen it at any other time, and yet the shares aren't anything close to what they used to be when something like this came close to happening.